Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start today's webinar, the market is probably questioning Friday's price action after the Aussie did rally quite hard and pinged a high of 81.22 before dropping back to 80.5 on the close in New York. The technical implications are not overly bullish, and my concerns that the fact is that this move is only on the back of a weaker US dollar is that if we see a sharp turnaround in the dollar, then we could see the Aussie takes a serious tumble, with the immediate support coming in at 80.0510. A break beneath there would give a significant move to the downside and bring in an objective that comes in around 78.70, roughly around this region here, or just in front of this 60-day moving average. But let's see how the market plays out in the next 24 hours. We do need to see more dollar strength coming through to support this view. Otherwise, we could easily see a retest to the top side with the resistance coming in at 90 and firm above at 81.4055. On Friday, the euro managed to reach a high of 120.88 before declining, and now settling in around this morning at 120.10. Does question whether the market has actually recorded a high, even though it has negated that shooting star from the Friday's 88 high. So if that's the case, then we could see a little bit of downside pressure for the start of today. However, support comes in now at 119.70.80, and the uptrend clearly coming in at 119.10.15. But as I mentioned, I still need to see further evidence from the US dollar to support a bearish case for the euro. Otherwise, the market could rebound off this level of 70.80 and look back up towards that top side, with the immediate resistance coming in at 120.55 and then at 120.80. On a dollar yen case, the market did gap open this morning, and as you can see here from the close in New York, it's traded at a high today of 108.45. With the geopolitical tension easing over the weekend, dollar yen is now looking towards a resistance of 108.50.65. Now a break above there would give further scope to the upside and bring in a target of 109.30. I'm a little bit cautious of this move at this stage, purely for the fact is that gaps short-term gaps tend to be filled. So we could easily see a pullback towards the support at 107.70 before any initial rally. But as I mentioned before, it's a US dollar story, and if we do fail to get any significant moves to the US dollar, then we could be looking back towards the objective of 106.75 for this week. After 6-7 days of trading sideways, the pound has finally found a bit of inspiration towards the upside, purely for the fact of a weaker US dollar, and now looking towards the resistance of 132.45.55. It is viewed that the market will probably fail towards this region, and as previously, the strong bearish outside range day could actually shift the focus back towards 130.130. With the Brexit story still lingering out there to the negative side, could cause a bit of, or could cast, should I say, a dark cloud over the pound and see a move through 130.130 and down towards 130.60. As some of you may have been trading this view that the 113.60 should cap, the market did actually back away Friday and has continued after recording a low of 34 this morning. In light of the current pattern, the uptrend comes in now at 1,320.22 with immediate support seen at 1,333, which is near enough the low from this morning. With the geopolitical tensions easing, it should actually flow on to a slightly weaker gold price action, and this is what we're seeing at the moment. So we could see a pullback as far as 2022 before the initial rally. But do keep it very close to you in terms of trading in case we get something uncertainty of the North Korea and US political tension there, and we could see an impulse towards the upside. But the main reason why this gold has held to a very firm uptrend, one is the weak US dollar, and also with the tension overseas. So this is a bit of a relief to the fact that the market's slowly unwinding out of a overbought situation and could easily welcome at this pullback at this stage. To wrap up with silver, the market is retreating clearly from this $18 mark and looking back towards the immediate support of $17.75, which is minor, which was the low this morning. And then the uptrend comes in at $17.60. Now, a break beneath there would give further scope to the downside to a target of $17.1520. In my preferred view, the market is looking negative, and I've been that way for a few days, and I expect to see any fresh advances to fail. So this is clearly a point where the market is unwinding out of its longs and taking some profit as the geopolitical risk overseas actually eases slightly. So it does give a stronger case to support this pullback. And to wrap up with oil, the market plummeted on Friday after retreats from that region of $49.90 to $50 a barrel. In light of the current pattern, I'm not getting bearish until we see a move under 47.40.60. If so, then that would reopen the downside to 45.70. But while intact, we should expect to see further rounds to the upside, with the target still holding around that $50 a barrel. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report that will be released shortly.